Good morning, everyone, and welcome to the Quantum Leap Morning Leap session for Friday, August the 25th, 2017. My name is Doug McKay. I am the founder of Quantum Leap. Each morning we get together in these live go-to sessions to take the market macro to micro, take a look at the structure of the market, and then we drill down to our trade levels, our targets, and our hypotheses for the day. This is a subscription room, so if you're interested in checking it out, please send me an email at quantumleapfutures@gmail.com or send me a Skype contact request at Doug_McKay. Hold on one second. Sorry about this. Sorry about that. So send me a contact request at under Skype, Doug_McKay. I'll be the one from Windsor, Ontario, Canada. Of course, you can check out my videos. There's over 640 some odd videos on YouTube of these pre-market sessions and some other information about other webinars that I've done. And please like me on Twitter and like me on YouTube. This is going to be the last day of free access to the room. So if you're interested, send me an email. And I will be doing live trading and analysis during the course of the trading day. I'll close the room down after the pre-market session to get the recording so I can put it up on YouTube, but then we'll reopen another room and I'll post it on Twitter as well. Okay, so let's go get rid of the disclaimer. No, please read through the disclaimer. Nobody at Quantum Leap is a certified trading advisor. We are retail traders operating within a self-organized learning environment. Past performance is not indicative of future results, and any trades that you see in Quantum Leap are for education purposes only. Please trade your own due diligence, your own trade plan, and your own risk metrics. So taking a look at yesterday. Yesterday, we were opening at the range high of that inside day from Wednesday. We were thinking we might open just outside of range, but basically our main hypothesis was a open option out of range, a rotation down, finding buyers, and then rotating up into this 51 and a quarter. Hypo 2 was a gap and go day. We did not get that. Hypo 3 was a failure to break or take out 51 and rotate down into the 34.35 to 30 and a quarter. But all of our hypos were centered around a rotational day inside of that Tuesday. I can't scrunch the chart, but both Wednesday and Thursday were inside of that trend day on Tuesday. We basically, had a move for a breakout. Buyers stepped in, nice little Mr. Sneaky setup, rotated back up into the value area, took a trip through value, failed at the value area high from the prior day twice, got the continuation down into the microcomposite VPOC that we'll look at on the composite in just a couple minutes, and then found the buyers another Mr. Sneaky setup, and then rotated back up, went sideways fighting the range low from the prior day, poked back up, trying to get back into value, looked like they were going to continue to take it up for a neutral day. What do we get? Mr. Sneaky. I can't talk enough about these inside bars and the Mr. Sneaky setup and the FUBAR Mr. Sneaky setup. And if you're interested in finding out more, come join us during the pre-market session. We'll be talking about it. And then we came down and we fought the range low again and just went sideways into the close, created nice kurtosis and accepted value, and had the VPOC finish at that 39.50, just below the microcomposite value area high of that balance zone from that we were in from May through to July. So basically a sideways day. Taking a look at the news today, I was just talking about this. On investing, I've got Yellen speaking at 10 and Draghi speaking at 3. But on Forex, I've got Yellen speaking at 12. So I'm not sure. I'm going to have to figure that out. But basically, we've got no real scheduled news today. We had the core durable goods that came out, as a slight beat. But everything's going to be about Jackson Hole and news coming out from there. And then with Yellen speaking and Draghi speaking, expect to see some volatility coming into this afternoon. Other than that, there's really just the Hughes Baker oil count that's going to be of any significant. So just verify when she is speaking, because that's going to be the big, big time. You want to be very careful and wait to see what comes out. Just taking a look at the macro to micro, I always start my day the same way. I use a basic candlestick chart and a 9 EMA and a 20 SMA, and I'm looking for slope and separation, where we are within the trend in the different time frames. You can see the monthly, we've got great slope, great separation. Trend is very strong, doesn't even get challenged until we get into the 2300s. On the weekly, we had the inside bar, weekly Mr. Sneaky, and we rotated down. We talked about it on the Monday of this week right here, that we were likely to rotate down to test the 9 EMA. We put the blow off top in and then came down, tested the 9 EMA. Then next week we went down to the 20, and then this week so far we've bounced off the 20 and we're back above the 9 and working our way back to retest this trend line. This trend line is actually on a daily, so let's go to the daily. Let me get rid of the open interest here. You can see this is our long time frame trend line that starts with the election gap up, and we've tested it several times, but now we've broken it. And as we move down in the time frame, we're starting to see some weakness coming in. And currently, right now, we're below the trend line, and we're fighting to get back above the 9 EMA right now on the daily. Keep an eye on this level right here, this 2454 75 area is going to be my key line in the sand. It's not just because it's the 20 SMA, as you'll see on the profile. It is also a significant CLVN that I'll be watching with some significant targets just above. But we are seeing some weakness coming in, but we're trying to take back this what could be a possible trend down on the daily. As we move to the intraday, you can see that we were starting to trend down, and we're getting these pullbacks, these back and fills, but we're starting to get an upward trend right now. We're at an MA hug. This is a decision point. I think today could be significant in a couple different opportunities if they set up. Going to the 1 hour, you can see same thing, but we're starting to see that upward trend again. We've got resistance right here, double top at the 49. Look for this double top to get broken, and then I'd be targeting that 5150 and 52 area. There's a naked cross at 52, and there is a naked VPOC at 5150 with a naked close up at the 53 and a quarter, I believe. But we've got slope and separation to the upside on the 1 hour. You can see it accelerates on the 30 minute. We just came back down and tested the 9 EMA, see if we can hold above it. Going to the 15 minute, we're seeing some pullback here, and this is where this naked cross is up here at the 52 and a quarter. You can see it right here. We have not come back and tested this naked cross here. So see if we can hold this level and get back above the 46. Otherwise, we're likely to come down and test a 44.75 again. And then on the 5 minute, you can see that we have fallen and we are getting a possible downward trend. So On the intraday, the larger time frames are still up or trying to get up, but we're seeing some weakness coming in. Now let's take a look at it on the composite, because this shows it much better. So a little bit of context, because we got new people in the room, just to give you some simple auction logic. Okay, right here is that that balancing area, that microcomposite that ran from May through to the breakout. The value area high is at 40. The value area low is at 1550. The microcomposite VPOC is at 36. We come up, we break above the value area, accept value just above it. Then we go into price discovery, come up 3 days of balance up here, accepting price higher at 57.50. Then we gap up again. We come up and try to hold value higher, and then we come down the first time, pick up the late buyers at 57.50, move back up, accept that value at the 69 area again, and then we put in the blow off top up into the 88.50. They come down, unable to hold. They fall out of value. The value area low for this microcomposite is right here at 65.25. We said if they came down, they wouldn't likely find buyers at the 57.50 this time. They'd have to go lower. Where do they go? They come right down to the area where they accepted value just after the breakout, but they push through into the 35. They accept that value right at the value area high again, gap up, accept value at the 63, 64 level, push up into where they tried, the last place they tried to hold value, the 72. They're unable to do that. What do? We fall out of value again. We said if we came back down, we would not likely find buyers at 35. We'd have to come lower. Where do we come? We come down right here, okay, just before we had this gap up and the move above the value area. And then what do? They make a full trip through value down into the 15. They find the buyers, accept value again at this lower area around the 24 area, and then they gap up again. And now we've been auctioning this area right here, this low volume area, and we're auctioning it. And right now we have a 3-day microcomposite VPOC here at the. I'm sorry, it is. I just want to make sure it's shifted. I want to bring this in. Yes, we do. So we have the shift, because these 3 days right here, okay, we accepted value in the 24, but now in the last 3 days, and if I bring in the breakout day, we've accepted value here at 43 so far, and right now we're testing the value area high of this 6-day microcomposite. 54.50 still remains the key line in the sand, because that gets us 54.50 gets us a breakout of this last fractal high, and a push. I would look for a push into the 57, and the 60 becomes the next major resistance. Anything above that, I'm targeting 64 and 69. You can even target the 65, which is that value area low. If we get inside of that, then you get a nice trade all the way up into 69, 75, if not 71, 72, and then likely chop in this area as we try to hold value back in that balance area, and a push up into possibly testing the highs. The key area below for me still remains, believe it or not, that 40. Even though we chopped through it a few times yesterday, you might even want to move it down to or move it up to the LVN from last night at 44.25. Because then if we can't hold the LVN, we'll go into that lower distribution from overnight, which is down in the 40 level. And the VPOC, I don't know if it's shifted yet. 35, of course, is going to be the major target below. And then we've got this undetermined fair value between 35, 27, and 22. And then the key support level and the key line in the sand below is down here still at that 24.1475. So taking a look at the overnight, you can see that inventory is about 60% net positive, but it's been choppy, and we've got a double distribution with the LVN right there at that 44 and a quarter, midpoint being 43 and a quarter, and the VPOC has not shifted and is not likely to shift with the time that we've got going unless we get a fair amount of volume coming in. So you can use the 44. The upper HVN is the 46 and a quarter, and then the lower HVN is the VPOC at 42, and then we got down to the 37.50. So, and we've got this double top here, which is a week high at the 49 from the overnight and yesterday's RTH session. So any break above that, then you're looking for that move into this 51 and a quarter. So let's take our levels and start moving them over. Of course, we still have 30 minutes to go, so this 49 high might not hold, and we might get a push up. But the overnight low is likely to hold down at 37.50. That's 2 ticks below the value area low from yesterday. The key over underline I'm using is this 44 and a quarter LVN from the double distribution. The Globex VPOC is 42. So I will be, and that's sitting right on the value area high from the RTH session yesterday. So I'll be targeting that with a break of 44. So my trade plan is going to derive around the double distribution of the Globex, and I'll be looking for longs above 44 and a quarter. Anything below 44 and a quarter, I'm shorting into the 42 as a high probability target with the naked close at 41 and the naked VPOC and the value area high from the micro composite. This micro composite, we don't need the Globex now. This micro composite high at the 40 area. So we've got a lot down here between 42 and 39.50. And this is a pretty tight value area. I'll be watching the 37 as a breaking zone into that 35.75, and then below that it's targeting down here back into the half gap zone. Now there is our daily ATR full session average true range is running at 1758. That's the 20 period. So off of the low overnight, our upside daily ATR target is all the way up here at 55. There's that naked close at 53 and a quarter. We've got that naked cross at 52 and a quarter. That's a naked cross on the 15-minute. So there's a lot above here with the break above 40. So I'm actually going to be using this open from the prior day and the range high from the inside day as a trade level. And I know this chart is getting a little bit convoluted, but we're really chopping in this area, so there's a lot of levels to look at. So and above this, we got lots of targets all the way up into 53. Watching our daily ATR. Something to pay attention to is the fact that this is the last day of trading of the week. Our week open is all the way down at 24.2875. So if we take 1 day of full session true average true range and put it to the open of the week, that gives us weekly critical mass here at 46.75. It's not going to play in the beginning of the day, but as we get closer to the end of the day, if they're trading above the 46.75 and above the prior day range, critical mass could kick in, and we could drift up into the close as the sellers capitulate, because there's no way that they're going to have an opportunity to take it all the way back down and have a bearish week. So the caveat to that is, of course, that we do have news coming out. We've got two major speakers speaking this afternoon, with Draghi speaking all the way into 3 o'clock, so into the last hour and 15 minutes of the market. So you got to be careful. But if we're trading up in the 50s, just don't be careful trying to fade that, because it could just be a slow drift up as the sellers capitulate and the buyers take control, and they try to take it back up into that balance area up there and towards the month open. Our month open is up at 70.50, and we've only got 5 days left, and they might take a run this afternoon into that area. So what is my hypothesis for the day? Nothing really changes much. I'm looking for an open auction in range. I'm looking for a move down into the 42 to the 39, maybe even to the 37 trip through value. Then I'm looking for buyers to step in, rotate us up into the 51.25 and chop in this area as we take out all these targets. That is hypo 1. Hypo 2, which has got equal opportunity, is a push up on the open up into these targets, fail somewhere between the 53 and 57 area, find responsive sellers, rotate us back down, and chop some more in the 45 to 35 area. That is hypo 2. Hypo 3 is if we open up above range as a possible gap and go, or a open test drive and failure to get inside of value, leaving the overnight low alone, even if they dip in, and then rotating us up into the 53, 55 area, chop between here, push up and close somewhere back up here in the prior micro composite value area up here. Sorry, I'm losing my voice. And then hypo 4 is more sideways action and a chop between the 35 and the 55 as we just go sideways and fight the 49 and 51 area. I have to add the alternative in, which is a failure day, failure to take out the 51 area, 52 area, come down into the 39, chop between 39 and 35, and then fail and come down into the gap zone and close down here, and come down and close the gap and close this naked close and naked VPOC down in 27 on bad news coming out and challenging the week open down here. So those are my 4 main hypotheses and my alternative. Quickly take a look at gold. Gold continues to base. No, we're just continuing to base in this area. Our most accepted price right now is here at the 94s. We're chopping between the 90 and the 94, 95. Same thing, okay? This is becoming a very strong symmetrical triangle. We're compressing, and gold is likely to make a breakout, whether it's today or next week. But we look for this break, and I'd be looking for a break above the 96 or below the 87. Nothing changes. This whole week has been the same hypothesis. Chop around, base at the 94 to 90 area, and look for the breakouts above 96 and below 87. Below 87, our first target is 84.50 and 79 and 75. Back to the composite VPOC that goes back to 2008. Above the 96, look for the test of the fractal high at 98 and a push through into the 1300s. And if we get back into the 1300s, 1302, 1307, and the rule of 10 at 1310, with 1312, 20 being the major target above. So that's going to complete our pre-market session. As always, trade well, trade safe, and we'll catch you on the flip side. Don't forget to, if you go and watch the video, to like the video, and I'm going to post the link onto Twitter for the live trading session coming up at 9:30, and please retweet that, and so we can fill the seats today. All right, everybody have a good day. Keep it tight, keep it light. It is Friday. Don't go into the weekend with a loss. It always sucks to have to wait for the market to open on Sunday night when you're in a losing situation or you blew your capital, more importantly, your emotional capital coming into the weekend. See you on the flip side.